Oil prices have dropped today, and I want to talk about why are oil prices dropping, and if you're reading the news, it's very negative revolving around oil and gas, and it's not painting the true picture. Okay, now I want to go over why I believe journalism is not have all the facts when it comes to mainstream news for the oil and gas industry, and also why oil prices have dropped. And today, right now, $38, $27 a barrel for WTI crude, Brent crude, $41 a barrel. Now, if you're reading the news, it's very negative. I just really dislike the oil and gas news right now, and Google algorithms controls who sees what. Okay, bottom line, the more clicks a news article gets, the higher on the list it goes. And so there's a lot of news out there you'll never read, quite simply because it's not high enough on the chain. Okay. And so there's millions of news articles going out every day, but you're only reading the top 0.01% of those articles. And so most of those articles are based upon what's happening with the pandemic. And that's the way this world controls information. Now, so if you're reading the news, there's a lot of negativity. Global oil demand to return to pre-crisis levels in 3 years. So they're saying that what happened because of the pandemic destroyed oil demand, and we're not going to come close to what it was before for another 3 years. Okay, now, it's not exactly true. Everybody was saying we dropped down to 60 million barrels a day demand, but really it dropped down to 80. And right now we're up to 90 million, and it's actually growing faster than anybody anticipated. Okay. So oil prices crash on weak demand. So they keep hammering the fact that demand is destroying oil prices. Okay. Now, that is a small portion of what is actually happening. Okay. But there is a lot more going on behind the scenes than what most people realize. Oil prices settle at lowest since June, with Brent prices below 40. Okay. Brent crude was pressured Monday after Saudi Arabia lowered its official selling price for Asian buyers, analysts said. So here's what's going on. So Saudi Arabia and Russia, their attempt to destroy the shale industry is working. But in order to continue their plan to destroy the shale industry, they have to control and maintain low oil prices. So when the economy started roaring and demand came back faster than we expected, because the COVID-19 turns out it wasn't near as serious as everybody believed and what the news was reporting, thanks to Google and the analytics and everyone clicking anything to do with the pandemic, oil prices started going up quickly. But the thing is that Russia and Saudi Arabia started increasing production again. Okay, so if oil prices go up, they increase production. Or they lower their price, like what Saudi Arabia just did to Asia. They lowered their prices to control the oil and gas market. Why? To take shale out of the game. Because Russia and Saudi Arabia can produce a barrel of oil much cheaper than the shale industry. Okay, American shale oil is the most expensive barrel of oil to produce. So all of this doom and gloom news that you're reading, oil prices drop, oil prices rise, oil prices drop. Look, it's going to be the same story over and over again. They are regurgitating the same thing over and over again. Oh, the pandemic is slowing down oil demand. Oh, people are driving less. Oh, people are flying less. Look, guys, it comes down to the fact that shale is too expensive to produce a barrel of oil, and Saudi Arabia and Russia are manipulating prices, keeping it low enough to keep shale out of the game, but keeping it high enough to keep themselves profitable. Okay, and they're going to continue this game until the shale industry is completely taken out, or until they drop down to 4 to 8 million barrels a day, lower than what it's currently producing. So it's almost like they're documenting the play-by-play of of the Titanic as it crashes into the iceberg and starts to sink. And imagine that process taking a year. Well, it's slow, it's boring, and it's the same thing over and over again. But hey, journalism, they got to make money, and they got to feed their kids, and they got to keep it interesting. And so they keep you on pendulum swing where, oh my God, oil's falling apart, to, oh man, oil prices have come back strong. And so, but Saudi Arabia is keeping that pendulum right in the middle. So it's not very exciting, but I will tell you, it's working. The shale industry is caving in, and production for shale oil and gas has dropped by 2 million barrels a day. And the only reason why it's maintaining that level and it's not dropping much faster is because they're taking wells that they've already drilled that they delayed because of lower oil prices, and they're bringing them online now. And so it's maintaining that 2 million less, but we're not going to see a major drop until we're sitting in this situation for several months to continue. Let's read some more news here. So I love to I love it when the Russian minister speaks, because he's. I hate to say this, but I trust this Russian guy more than most of the American journalism today. Global oil supply could lower in the period of 2023 to 2025 due to the insufficient investment in oil production this year because of the pandemic and the crash in oil prices. This year, global investment in oil and gas production are expected to be US $170 billion, lower than the 2019 level, and investment is unlikely to fully recover in 2021. So bottom line, there has been a tremendous of insufficient investment in the oil and gas industry due to the pandemic, and quite simply, not just a pandemic. Also due to the fact that the shale industry is not economically feasible. You really need $100 oil for it to be economically feasible. And the boom started when oil prices were triple digit. And they were drilling in premium areas, but now they're starting to drill on the outskirts of the shale. Okay, they're running out of places to drill for shale oil. That's number one. And number two, they're more efficient at developing. They've gotten much more efficient, cheaper to develop. But the thing is, oil prices are $40-something a barrel. They weren't even economic over the last 5 years because oil prices were $60-something a barrel, and they're running out of premium acreage to develop on. So instead of wells producing at higher rates, they are declining much faster because they're pumping more fluid into the structure with each frac. And those fracs take thousands and thousands of gallons of water to shoving into the oil and gas structure. And when you got, and they're doing this every single day with many wells, it's only going to cause it to reduce the amount of oil recovery, and it's only increasing the amount of fluids of water. And so this is lowering the oil output. They're less economical each and every well that they drill. And with low oil prices, the shale industry is coming to an end of its days. I want to, oil industry leader Harold Hamm says that industry is stabilizing. Now, this is a guy that owns Continental Resources. He made his billions in the shale industry. Now, I want you to hear what he has to say, and I'll give you my take on it.
Last year, there was a lot of worry that the shale industry would be broken. Harold, where are we in that? You know, we saw a number of shale companies unable to handle it. They actually had to either declare bankruptcy, close shop. What's your take on where we are with shale and the industry now with oil at the levels that we're in the $40 range?
Well, we're certainly going to see a restructured industry coming out of this. The companies that are strong, like Continental and a lot of others, are real oil and gas companies. They're going to be much stronger. You know, we're seeing a great improvement in efficiencies again. Every time we slow down like this, we do that, and our company is certainly working on that. And we've seen a great deal of additional efficiencies that we can build in the future going into it. So, but we're seeing a lot of these private equities and all that is going by the wayside. A lot of them are being put together under one management team or another, and in the industry, as you know, we refer to them as cramcos. Several companies has been crammed together. Others that were weak sisters are just not making it. They're having to file bankruptcy. So anyway, you have to prepare for this. This industry is cyclical. It goes up and down, and you have to prepare for that. Make sure you're not too far out over the skis with debt, and so that's just part of what we do in this industry. And you survive it, and you go on to the better times, and that's where we're headed. This industry is stabilizing, and we're heading to better times.
Okay, so he said a few things. Okay, so number one, he was focused on efficiency. Okay, in other words, hey, listen, we're able to develop a barrel of oil much cheaper than we did in 2012. Each year, we just get better and more efficient at fracking and drilling for much cheaper. Although that is true, they could produce a barrel of oil for much less. Yes, but they're producing less oil with each well that they drill. So all of that efficiency doesn't even matter. It gets absorbed in the fact that they're producing less oil because they developed the premium leases. Those are gone. Okay, that's number one. Now, he says, hey, the oil and gas industry is cyclical. It goes up and it goes down. It goes up and it goes down. Yes, that's true. Historically, that is true, but historically, that's always been due to conventional oil. Shale is unconventional. Shale is you're spending $20 million to drill one well as opposed to spending $500,000 on a well. It's completely different. What happened was in 2012, when the shale revolution started, they had easy to get to money from the banks. The banks spent billions and billions of dollars funneling it into shale oil and gas projects, making guys like Harold Hamm multi-billionaires, causing ExxonMobil, Chevron, British Petroleum, all these major oil and gas industries bigger than they've ever been before, making us the world's biggest oil producing country, outpacing Russia and Saudi Arabia for the first time in history. But the problem with all of that is that they found out, hey, shale is not economically feasible. It's one formation that doesn't make any money, and they figured the truth out. So here's Harold Hamm saying, hey, it's cyclical, hey, we're efficient, and you can't get over the skis with debt. You can't have too much debt. And hey, everything, better days are ahead. Listen, not for the shale guys. What are you going to, hey, Harold Hamm, what are you going to do with shale industry that needs $100 oil and that needs to find more premium leases? It doesn't exist. So what he's doing is he's like, hey, guys, listen, if you look at his stock, you look at Continental Resources, okay? So over the last 5 years, so back in September 2015, they're roughly around $30-something per share. And they got as high as $65 per share. But right now, they're at $14 per a share. They are losing their butts. And so he has to say things on public news to drive interest in his stock. Look, it's falling apart because they're focused in the shale arena. Over the last 6 months, they've gone up. Okay, and that's because he's telling people, hey, listen, it's going to come back. It's cyclical. We're making great recovery. But you look over the last year, man, we went from $30-something and now he's at $14 per share. And he's trying to drive demand for a stock. He's trying to bring good news to the industry to make everyone believe, hey, everything's going to be okay. But it's the shale industry. You look here, fracking decade of growth ends as Schlumberger exits. Okay, the U.S. oil boom was the most exciting growth story in energy for nearly a decade, but the exit of a major player from a big part of the business suggests that the growth story may be over. Schlumberger last week said it would unload its North American hydraulic fracturing unit, combining it with Liberty Bell. So they got rid of their hydraulic fracturing unit. They were the top number one fracker in the industry, and they're unloading. What does that tell you? They're getting out of the oil and gas industry, and they're saying that they're going to move to offshore, the offshore side of things. Look, the offshore industry is another industry that is faltering. Okay, they're saying that they've hit peak production in the offshore industry. So look, there's nowhere to hide. The shale industry is falling apart. There is more bankruptcies that are happening every day, and more to come. Schlumberger has exited. They're one of the biggest in that part of the industry. And so right now what I'm doing is I'm focusing on the conventional side. While everybody else is falling apart, while banks and all the money for the oil and gas industry, there's no money for the oil and gas industry. Banks are not lending. Stock guys are not. There's not near as much money funneling to the oil industry near what it was. They're faltering. That's why Continental Resources, Ham's company, is losing $300 million a quarter. That's why all of these companies are filing for bankruptcy. And so right now, while everyone else is jumping ship and falling apart, we're going in, we're taking advantage of these prices. We're going in, picking up conventional leases. Now, shale is too expensive to develop, where conventional leases are still profitable because we're able to, get into premium leases that wouldn't be available had oil prices drop. And we're able to drill them for 600. We're able to drill a well for 600,000, drill test completion, turnkey. Okay, that's incredible right now. So even if oil prices stay at $40-something a barrel, it's very profitable. $40 oil is very profitable. We didn't hit $40 oil the first time until 2004. And at the time, we thought we hit the oil and gas lottery. But the wells that we're drilling then, if I remember correctly, in North Texas, we're drilling wells for over 800,000. So it's cheaper now to develop. It's actually more economical now than it was then because there's not a premium price tag on everything, and everyone's preaching doom and gloom right now. Okay, so it is very exciting times to be in the oil and gas industry. Once Saudi Arabia and Russia, they're going to continue their chess game against shale. Once they get what they want, once they destroy the shale oil and gas game, and their game is working, then we're going to see a major swing in the oil and gas industry in prices. And it'll be too late for the shale industry to come back due to just not enough rigs on location. It's going to take time to come back. So the further that slingshot goes back, the less money being spent in oil and gas, the less development. We're on a collision course for very high oil prices, and Saudi Arabia and Russia know it, and that's their plan. I'm Sean Pruitt, president of Kingdom Exploration. If you like these videos, please subscribe to my channel. If you're interested in looking at some oil and gas deals, feel free to give me a call. My information is in the description below.